Hey, what's up, guys? This is Cody the Coin Raptor, and another month means another Ark Invest Bitcoin monthly report. And this one is going to be for the month of November. Now, as usual, I'm going to go through this report. I'm going to give you my takeaways, and then I'm going to go ahead and finish and give you my final thoughts. All right, so let's get right into it. So it's going right into the market summary, some very important information they put out here. They recently talked about FTX's collapse. They say that FTX's collapse has pushed the market into further capitulation. Billions of dollars worth of customer deposits are locked on FTX, including BlockFi, which has been forced to file for bankruptcy. Genesis has halted customer withdrawals, and equity investors across the industry have marked their investments in FTX to zero. We're going to be talking about that more later. They have a whole slide on that. And they're coming away saying that the fall of FTX could be the most damaging event in crypto history, okay? Now, they've recently pointed out here this DCG Digital Currency Group, which is involved with Grayscale Bitcoin Trust. We're going to talk about that as well and what they think about GBTC. And they also come out here and say the fact that the fall of FTX has only increased their point that decentralization and transparency are paramount in order to solve the gross mismanagement that can be associated with central intermediaries, such as things that we've seen for FTX and also other crypto industries, crypto companies that have gone bankrupt, okay? Now, we're going to go ahead and move to the first thing we talk about, which is usually the network activity metrics. So two important ones to point out here under network security. We have mining difficulty, which has gone, in their opinion, bearish, and it has been downgraded to neutral, actually. And they're saying that mining difficulty has increased. That's something that I've talked about as well on my channel. So mining difficulty is getting harder, right? Meanwhile, you have the miners' revenue, which has been getting hammered lately. And so they've downgraded that to bearish. So they're saying that that's bearish because the miners' revenue has not been as high as it's been in the past. So that's kind of two big hits there for network security. And we're going to move to the next point here, which is long-term valuation. So they've come out and they said market cost basis, based on the market cost basis, it is extremely undervalued. Bitcoin is undervalued, and in their view, that is bullish. So they upgraded that as well, and they're putting this realized price at about 20,000. So we are significantly below that level, and they're saying that that's undervalued. Next, they're going to talk about the fall of FTX. And so they put together this timeline for the fall of FTX. I've actually done something very similar to that. Definitely recommend you guys check it out, in which I've kind of listed this, but they've done the same thing here, in which they've given you a timeline as well. And they've also included some extra things after the fact, like BlockFi files for bankruptcy, and then FTX discloses its creditors, and et cetera, et cetera. Now, they've actually come out and they've said that the FTX insolvency was one of the worst events, more damaging than the 2014 Mt. Gox hack in crypto history. Now, that is particularly telling because the Mt. Gox hack for the longest time was considered the worst thing to happen to the crypto industry. And so Ark Invest is coming out and saying, no, this is actually worse. The FTX debacle and bankruptcy is worse than the Mt. Gox hack. Okay? And then they actually go on to say that this collapse could delay institutional crypto adoption by years and give regulators license to take draconian measures. This is also something I've pointed out recently, in the fact that the collapse of FTX is going to spur regulators to pass bills and go after a lot of these crypto companies that aren't regulated. And then, in addition, you have the institutional adoption of cryptocurrency is going to be delayed, all right, by years, because people are going to think that it's all a house of cards and it's all a scam. So they've also come out and said, hey, that's a big issue. And so I think that's primarily why they're saying that it's worse than the Mt. Gox hack. And then they've also said that the bankruptcy filing disclosed the lack of trustworthy financial information, use of corporate funds to purchase personal property, and large personal loans, including $1 billion to Sam Bankman-Fried. Now, again, I've covered the bankruptcy filing on this channel. Definitely recommend you guys take a look at that, and it is an absolute mess. It's even worse than what they're saying in this little blurb. it's an absolute disaster. All right. Now we go down to our next slide here, and so they've kind of put out this flow chart, and this flow chart shows many different crypto companies and how much they've lost. Okay, now one thing I want to draw your attention to here is Grayscale specifically. They say Grayscale's Bitcoin Trust, which is GBTC, it trades under that ticker. Grayscale's Bitcoin Trust, which is a subsidiary of DCG, is the center of attention as the discount reached new highs amid rumors of DCG's insolvency. Okay, so for those of you that aren't aware, so Ark Invest went and actually bought more Grayscale Bitcoin Trust because, in their opinion, it is the discount to Bitcoin right now is extreme. Okay, so Grayscale Bitcoin Trust should be trading close to where Bitcoin is, but in fact, it's trading at a pretty major discount to Bitcoin. And they've said, in our view, Grayscale's continued discount pressure is unwarranted. So again, they bought based off of that. Coinbase has confirmed that Grayscale's reserves are fully audited and wholly protected under a grantor trust, even in the face of a potential bankruptcy. So they've pointed out here, the whole point of this little flow chart, you take a look here at Grayscale, they goes from DCG to Grayscale, and then it says, okay, they're trading at a deep discount, but they're unwilling to show proof of reserves. Again, that's something I've talked about on the channel as well. And however, they've come down here and they said, well, Coinbase can verify that they actually do own the Bitcoin that they say they're owning. So according to the Coinbase custody, they're saying that they actually do own those funds. And then they've come down here and said that the Grayscale reserves are accurate. So I've gotten some questions on the channel about Grayscale Bitcoin Trust. And according to Ark Invest, they are very convinced that the reserves are accurate and it's not insolvent. Okay, so according to Ark, that's why they bought it. And another big concern here they have is that DCG, again, that company, Digital Currency Group, their CEO disclosed that DCG owes $575 million to Genesis crypto lending arm. So again, Genesis, they actually filed for bankruptcy, so that could potentially be a risk for for the DCG. All right. Next, we have the exposure, right, to FTX's bankruptcy. So there are several venture capital and crypto industry leaders that have exposure to FTX, including a sum of $3 billion to its top 50 creditors. So they're just saying here that FTX owes serious money to a lot of different creditors. And some of these investors include companies like Sequoia Capital, Temesk, SoftBank, and Paradigm. Okay, so that's some pretty major exposure, and we could potentially see some more contagion down the line. All right, now they've also talked here about this proof of solvency. So this idea of proof of solvency is that these crypto exchanges are adopting this kind of what they call the proof of reserves. All right, and that's a mathematically verified proof to ensure that they have the assets that match the liabilities. Okay, so there are several there are several exchanges that have agreed to this idea of proof of reserves, and they've put here this wall of fame. And according to the wall of fame, here are the gold standard of the exchanges that are to be trusted, and that's BitMEX, CoinFloor, Gate.io, Kraken, and OKX. So that is the gold standard. The silver standard, Binance, but only for Bitcoin, and then HBTC. And then, as far as I'm concerned, after everybody else, it's kind of a question. It's up in the air, right? BitBuy is on here. Binance, the other non-Bitcoin assets for Binance, Crypto.com, Bitfinex, Deribit, Huobi, all those KuCoin, and these other exchanges that have not really given proof of reserves in the same way that these top exchanges have here. All right. Now, one other thing I want to say about this is the fact that they've left off Coinbase, and Coinbase is a huge exchange. And the reason why they've probably left off Coinbase is because Coinbase is a publicly traded company, and you can actually see, based on their assets, again, I did a whole video on this. You go onto Coinbase, you can actually look at their filings on their 10Qs, and you can see that they, according to Coinbase, they're reporting how much assets versus liabilities they have because they are a public company. So that's probably the reason why Coinbase isn't on here. All right. Next, They talk about the fact that the decentralized exchanges are regaining a huge share of trading volume relative to centralized exchanges, and that's not surprising because many investors right now are using these decentralized exchanges because of the fact that they are more transparent, and on top of that, they still keep custody of their own crypto. So that's an important thing to notice here, is that we've seen a rapid spike in the rise of the decentralized exchanges. All right, next, we have the Bitcoin realized profit loss ratio reaching an all-time low. I've previously talked about unrealized profit loss, but they're looking at realized profit loss. And for Ark Invest, they're saying that it reached a low of 7.2% in November. And close to that level or so is when usually they wind up seeing a significant capitulation event, okay? So we are close to, what they're trying to say here is we're very close to a significant capitulation event, or it's already underway, is what they're saying here. So if that's the case, then according to Ark Invest, we don't have that much further to fall if the realized profit loss ratio behaves the same way as it has in the past. Now, they've also come out and said that the long-term holders also remain strong. So their definition of long-term holders are people that have held the Bitcoin for over 155 days, and they're saying that the long-term holder supply is 72% of Bitcoin's total circulating supply, which is at a new high. Now, you can just go ahead and take a look at the long-term holder supply here. It is fairly high, and I don't think it's been higher than that. There's a little bit of a dip there, though, so maybe it was a little bit higher in September. And they've also said that net outflows from exchanges are also at an all-time high as well. Again, not surprising if you've been paying attention, because people are taking their crypto off of the exchanges and they're not keeping it on the exchanges where they could potentially be at risk. All right? And then they're also saying here that there's a shift to self-custody. Again, not a big surprise there. The hash rate is correcting. This is something I've talked about in the past couple of days. Now, the hash rate is falling, and it has been falling because the Bitcoin price has been falling. And so they're saying that it dropped 12.9% right as the Bitcoin's price fell in November. So what's happening here is that miners are being taken offline and miners are being put under stress. All right, so let's go ahead and I'm going to talk about my own takeaways from this. Okay, so my takeaways. All right, so this report overall was more bearish than October's report, okay? And this is understandable because of the FTX collapse and possible contagion around the industry. The contagion also would probably affect many companies, including SoftBank, Sequoia Capital, and Paradigm. So you could see a domino effect in those companies as well, financial problems. FTX's collapse was apparently more damaging than the Mt. Gox hack, and for reasons that we've talked about, the fact that it's affected so many other industries. And long-term holders are an increasing majority. They said 72% has been held for more than 155 days. Long-term holders are also much less likely to sell and have a higher conviction compared to short-term holders. That's a fact, and it will probably wind up putting a floor on the price. Exchanges have seen record outflows as investors withdraw their crypto. Investors can't sell if not on an exchange. So basically, since they're pulling their funds off the exchange, it's hard. It's hard and impossible in many cases not to sell if you don't put your assets on the exchange in order to sell. So that also kind of contributes a little bit to the less selling going on for many crypto. And decentralized exchanges have seen a huge increase in usage because of the FTX collapse. DeFi exchanges provide a high level of transparency and allow users to retain custody. Again, more fallout from the FTX collapse. And then falling prices have put stress on miners. So that's basically a summation of everything here that they talked about. And I think that this, like I said, is more bearish than October's report. I'm very curious to see what December's report is going to say, but then again, when it does, I will definitely let you guys know. I'll make a video about it, and then you can judge for yourself based on what they say in that, what you like and what you don't like, and what you agree with and what you don't agree with. I'd still Personally, I am still bearish in the short term and bullish in the long term. There's been a lot of talk about the collapse of FTX and the contagion, and I still think that there's probably some more contagion effects that are going to be underway. But that's definitely a video for another time. So if you like this video, let me know. Like, subscribe, and go ahead and leave a comment. And also make sure you follow me on Twitter. I'll try to post as much as possible and give you the most up-to-date information. All right? So this is Cody the Coin Raptor, and I hope to catch you in the next video.